So we're looking at how we could have improved the performance of the autonomous trader in September. Our portfolio got off to a great start here and began to slide down. We had a portfolio with 5 contracts per day, 1 of 10 per day, and 20 per day. These portfolios consist of the same 23 tickers. So we're going to follow this gold line here in the middle, 10 contracts per day, and we executed 170 contracts in that time period. So trying to figure out how we can add some portfolio optimization here and cut these losses here. Let's scroll down here and look at the bottom 15, and here's the top 15 trades in our period from September 9th to September 15th, which is right here in the disaster zone. So here's a trade that's a Tesla. It's a broken wing as a strategy. It has 3 legs, and we're happy that our system handles 3-legged strategies well. Opened on the 12th and closed it on the 15th. And so let's take the key over here so that we can really drill down and see the features of this particular contract. So over here in our spread viewer, we'll paste in the contract there and we'll view it. And here's our spread. We have the lower, the body of it, and the upper, and the contracts. These are the strike price at 347.50, 400, and 425. The open date and the close date. So let's go look at the contract. We can look at the wing, the lower put here, and we'll set the date here to the 12th, which is the day it opened. And we can see the underlying price, the strike price, it's the put, the expiration date, and we also get the Greek values here, which is kind of nice here. So we can look at how the gamma is shifting before we purchase this contract or put it into the spread. And here's the window, and then we closed it out on the 15th. So this is our activity. We can do the same thing for the body. There's your base pinned right at 0, and as we're approaching our expiration date, it also is plunging towards 0 again. And we also look at the theta chart, and of course all this data is exportable. And we can also look at the wing, and we can look at the theta and see it plunging away from 0, and then we can show all Greeks. And we have them in a contrast there. So the takeaway here is that the autonomous trader is able to trade itself out of a bad situation there, because the way the autonomous trader gets the trades fed to it. There's a process called Alpha Seeker, and we're going to get into that. And we're also going to talk more about what we can do to optimize the portfolios there. But it's unifying the 3 principles of derivatives trading, quantitative analysis, and portfolio optimization. That is Acropolis. Thanks for your time.